and thanks for watching the ETF Show. Joining us now is Todd Mathias, Vice President, Head of U.S. ETF Product Strategy and Development at Franklin Templeton. Well, first, Todd, what's the investment case for international dividends today?
Yeah, well, first, thanks for having me. As you can see, markets are pretty dynamic right now. And after, several years of what many would deem as U.S. market exceptionalism, that was really driven by kind of a handful of mega cap, growth heavy tech stocks, um, that imbalance is really, coming to the market as folks are opening up their first quarter statements here in 25. So international markets continue to offer stronger fundamentals, more balanced sector exposure, and relatively higher dividend yields than domestic markets. And so that leadership changing, um, international markets are coming back into the spotlight. I really view as three key themes that are driving that investment case. So first, diversification, really deemed the only free lunch in investing. You would see in a traditional 60-40 portfolio, about 20% should be non-US or international markets. Second, valuations. Not a great timing tool, but a really attractive long-term signal. And you're really seeing a really nice gap in terms of the valuation between US and international. And lastly, income. Historically been higher in international markets than you see in US large cap markets. Really, one of the best ways you can play defense is having income generation really to offset the impact of challenging market environments. So, really summing it up, diversification, valuation, and income.
Those are all great points. And now, Todd, what characteristics should you consider when looking to implement an international equity dividend solution?
Yeah, I appreciate that question. Was identifying the role of that dividend ETF in the greater portfolio first and foremost is the most important element. And if you look at an investor that's weighing the differences between products, they all care about different things, and whether that's income or risk reduction. Is it a value replacement? Is it sitting at the core? It's typically an interplay of all of these characteristics or a handful of them. And you want to understand, how does that impact the rest of my portfolio? Are these characteristics complementary? If I actually look back at the creation of one of our products, Divi, the core international dividend tilt product, we were actually engaged with a client that was running a series of income models. And they were really challenged by a lot of the first generation products that would take really meaningful sector and country bets or drift away from the market, where now this security selection was outweighing asset allocation. So for that client in particular, it was about the active risk of the portfolio. That was the number one characteristic they cared about. So really, when you look at it, first, portfolio fit. Does this solve the specific need for your client? Do you and can you have predictable and measurable results? Is the AUM and the fees competitive? And overall, does this actually enhance the overall experience for that end investor?
So, looking at Franklin Templeton's lineup of ETFs, I see there are two different index equity income offerings, Divi, which you just mentioned, as well as LVHI. Could you tell us about them and how they're different from one another?
Yeah, of course. We have two distinct index-based international dividend ETFs on the platform. As you had mentioned, Divi, which is our international core dividend tilt ETF. This has portfolio characteristics that would anchor you back to the core of the portfolio. So low fees, an index objective of minimizing that expected active risk, but maximizing yield. So think about this as beta exposure with more income. Very unique amongst its peers in that it's active risk aware. LVHI, again, International Low Volatility High Dividend Index ETF, built on three key tenets: sustainable high dividends, really mitigating the exposure to distressed companies; low volatility, so this is lower drawdowns in declining markets; and the belief that those two characteristics are complementary. One really unique feature about LVHI is that it is currency hedged. I was fortunate enough to live in London between 2013 and 2016, but I got paid in pound. And so that came with risk. When Brexit happened in 2016, there was a 3% impact on the local market. If you actually consider the depreciation in the pound on that same day, that 3% went to 11%. So I can certainly relate to the risk that currency investing does to an overall portfolio.
Mm-hmm. Now, finally, Todd, what kind of client adoption have you witnessed since you've had these ETFs in the market? And specifically, from where in their portfolio are they reallocating?
Yep. Again, a really fair question. Advisor interest in risk-aware strategies is really common, especially the first quarter of 2025. And you've seen that with the flow into both Divi and to LVHI, really significant over the quarter and over the past year. I look at three areas where we've seen allocations from clients. First was towards the end of last year, and this was more profit taking in US large cap and either drifting down in capitalization to something like mid cap or small cap or into things like Divi and LVHI. Again, looking for that diversification element that we talked about earlier today. Related to the first, this is the first time in over a decade that you've seen the gap in international market performance versus US market performance. So many investors that are newer to investing or newer to their financial advisor um, have never actually gotten the benefit of investing outside the US like they're seeing today. So we're actually seeing first time investors coming into the international equity space. And then lastly, it's just a swap from first generation international income products into something that has a more defined outcome and more predictable results. So it's a challenging market. Investors are looking for international solutions.
Well, Todd, really great to have you back with us. Thank you so much for joining us today, and thank you to everyone out there watching. Once again, that was Franklin Templeton's Todd Mathias, and I'm your host, Jenna Dagenhart with Asset TV.